Hello everyone and welcome to my morning report analysis videos on Wednesday 26th of September with me, Richard Paramarket Analyst at Hantec Markets. It's Fed Day today, and what we have got on the markets is a degree of consolidation. We've not really got any real direction that we've seen through Forex majors. Very slight degree of weakness on sterling, but generally speaking we're pretty much in consolidation mode across the board. With little real direction on Forex, little real direction on gold, little real direction on equity markets. You've saw a little degree of sort of correction on Wall Street last night. Nothing too significant, but futures are a shade higher basically today, so it's sort of balanced out that negativity. And subsequently, we're basically pretty much dead flat. You've got FTSE pretty much is now dead flat on the day. In terms of the dollar index, it continues to sort of drift a little bit sideways. You've got this consolidation, as I said, in front of the Fed, and that's despite the fact that we've still had this sort of track higher in yields. 10-year a shade lower today, but 10-year and 2-year actually a shade lower. But yeah, it's pretty much consolidation, I think, in front of the Fed. How the Fed comes out tonight, I think, is going to be really important for near-term outlook, because obviously the Fed is nailed on for a rate hike tonight. That's a given, 25 basis points to 2.25% on the Fed funds range. However, it's how the Fed comes across in the dot plots, in its inflation forecast, in its growth forecast, and that is the driving factor for the reaction tonight. And the likelihood is that, well, if it goes any... I mean, it's interesting because obviously we've got this trade dispute that continues to ramp up, and the Fed at some stage I think is going to have to take account of that, and it may well take a shade off some growth expectations because of that, and that might start to sort of factor in to how the market views rate hikes going forward, and certainly how yields react to that growth. To any sort of cutting of growth expectations would be really interesting, and I think that's going to be the driver of the dollar move. But in front of it, obviously, we have markets basically flat. Other than that, today we do still have the EIA inventories at 3:30. That's going to be basically a very shade lower in terms of drawdown on the crude oil stocks, a touch higher on distillates and a touch higher on gasoline. So it'll be interesting to see how that goes. We've had 5 weeks in a row of crude oil drawdowns, so that would be a sixth in a row. And again, that would be supportive of the oil price. Other than that, we've also got the RBNZ at 10 o'clock tonight, expected to hold fire at 1.75%. And to be honest, it's likely to come out with a dovish reasoning behind that, because it's expected to hold rates in 1.175 for through 2019 as well. So that takes me to my chart of the day, which is Euro Swissy. What we do have on Euro Swissy is this improvement. Actually, we've seen the euro starting to gain ground. That came on those comments from Mario Draghi on Monday, where it sort of talked about inflation, underlying inflation building relatively vigorously, and we've had a breakout, a near-term breakout on Euro Swissy. Little completed base pattern above 1345. Completed yesterday, closing breakout, and held a little correction back to the neckline, and that is now supported, that neckline. But also we've seen a broken downtrend of the past 2 months. You've seen these momentum indicators increasingly positive. Look at these divergences, these positive divergence on the RSI. You've got bull cross rising MACD lines, you've got stochastics at 2 months high. So this is increasingly positive on momentum, and with the breakout and with the broken downtrend. So we are sort of looking at a recovery, I think, towards 1450, which is this old key long-term pivot. If I sort of back out here, you can see that it was an old low, became a reaction high back in August. So a recovery seems to be building on Euro Swissy, and any weakness presumably with that in is a chance to buy. Now, you've seen the market unwinding back to that neckline, finding support at around that neckline today. 1345 is the neckline, and starting to see the MACD lines turning up, RSI turning up around 50, MACD lines turning up around neutral. So this is positive. This is sort of a little correction as a chance to buy. So a breakout back above 1382, which was yesterday's high, would open that 1450 level again and continue this recovery. So it doesn't look as though there's an improvement in Euro Swissy. So with that in mind, I wish you good luck in your trading today for the Fed, and I will speak to you later.